Good evening, everyone. Thank you very much for joining tonight's session. And sincere apologies for the delayed start, technical issues. So my name is Teresa Okogwa. I am the president of the NCP. And today's session, sorry, I'm using two screens. So my eyes will be darting between both screens. Today's session is an educational one. It's an educational discussion on Nigeria's new tax law and what Nigerians living in the UK and other parts of the world must know. So this session is for information and awareness purposes, and there will be questions at the end. So if you can please just put your questions in the chat or write them down, and we'll make sure there's plenty of time at the end to respond to all the questions. So yeah, it is my pleasure to introduce our guest speaker, Mr. Olabode Olushola. Mr. Olushola is a tax consultant and a fellow of the Association of Chartered Certified Accountant. So he will be guiding us through Nigeria's new tax laws and its implications for all of us. So I just want to say thank you once again for joining us and apologies for the delayed start. And yeah, for those of us just joining, this meeting is being recorded. And if you have any objections to that, please let me know privately. And please, I'd appreciate if you all mute yourselves. And it's up to you to turn on or off your videos. And please do not speak over each other when I call upon you to speak. Let us be respectful. And thank you very much. So I will now be handing over to the expert, Mr. Olushola. Thank you. Please take it away.
Yeah. Thank you very much, Teresa, for organizing this meeting. Hello, everyone. Before we dive into taxes, I promise to keep it as clear, practical, and painless as possible. We all know what taxes are. Okay. Recent changes to Nigerian tax law effective from January 1, 2026. First of all, before I start, I would like to put in, this disclaimer. If I can have the slide in, please, Maura.
I think can you proceed with the slide for now? I'm going to be about 2 minutes late. My system just hung.
All right. Okay.
Technical issues all around.
Let me see if I can open my slide here. Can you guys see my slide? Can you see my slide?
Not yet. I can't. Can anyone see his slide?
Share your screen first.
No.
You have to share your screen, please. Yeah.
Yeah, that's what I'm doing.
Still waiting in the lobby.
Okay. Am I in now? Oh yeah, I'm
Yeah,
in.
you're in, Wura.
Okay, yeah, good. So I think I should be able to quickly share. That's okay. Do you want me to share it now, Mr. B?
Okay, yeah, you can share it now. Yeah.
Okay. Okay. Just want to make those. Apologies, just a moment.
Okay.
Yeah, it will be open now. Okay, yes, there we go. Okay. Okay, yep. I'm ready now. Screen sharing. Yes. I hope you can see the screen now, please.
Yeah, fantastic. Yes.
Okay.
And then let's move on to slide 2. Next slide.
Please.
Yeah. So basically, this is just a disclaimer. So thank you for joining today's session. My name is Olabode, Olushola, FCCA. I am a qualified accountant and a member of the Institute of Chartered Accountants of Nigeria, ICANN. I practice in the United Kingdom as a member and a licensed practitioner of the Association of Certified Chartered Accountants, with practice rights in the UK and Ireland under FCCA practicing certificates. While I hold ICANN membership, I do not practice as a tax advisor in Nigeria. My professional practice is based in the UK and Ireland and is regulated under FCCA. So the information I'm going to be sharing today is basically general information and for educational purposes only, and does not constitute tax or legal or professional advice. Tax outcomes depend on individual circumstances, and Nigerian tax laws may apply differently in specific cases. Some generic questions and answers have been prepared as part of this session to address common concerns. Following the presentation, participants are welcome to send a direct message for private discussion where appropriate. Next steps or referrals can be explored. Okay, can we have the next slide, please? Okay. So tax reform changes, basically the Nigerian Tax Act, NTA 2025. Nigeria's current tax compliance system is undergoing a significant transformation driven by the Nigerian Tax Reform Act 2025, signed into law in 2025. This reform aims to modernize, digitize, and streamline a previously fragmented system to enhance efficiency, broaden the tax base, and improve revenue generation. The majority of the changes are set to become effective from January 2026, and it's 1st of January 2026. So NTA replaces and consolidates multiple existing tax laws, which is the Companies Act, Personal Income Tax Act, CGT Act, and also is the aim to unify the regime and simplify compliance and reducing the overlap between all these acts. So everything has been brought in under one umbrella to manage the tax system. So what are the key features of the current and upcoming tax system? The tax system operates on a decentralized structure across federal, state, and local government levels, though the recent reforms are focused on greater harmonization. What does the unified tax framework look like? Well, basically digital compliance. A core element of the reform is the robust adoption of technology. That is, the Tax Pro Max platform. The Federal Inland Revenue Service, FIRS, now renamed the NRS, Nigeria Revenue Service, launched the Tax Pro Max, which is the e-tax portal. This tax platform facilitates online registration, electronic filing returns, including VAT and company income tax, payment of taxes, and instant credit of withholding tax, and then the issuance of tax clearance certificates. 2, mandatory e-invoicing. The new laws mandate use of electronic invoicing and real-time VAT system aligned with NRS technology protocols. Then we have the TIN, Taxpayer Identification Number, TIN. Obtaining a TIN is now mandatory for every taxable person and is required for all financial activities, including the operating banks. Now we have the Joint Revenue Board, JRB. This body replaces the Joint Tax Board, JTB, with a stronger mandate to harmonize and coordinate tax administration across all government tiers. Then we have the Tax Ombudsman Office. A new office and upgraded tax appeal tribunal have been established to provide structured channels for complaints resolution. In this session, we will look at key tax law reforms in Nigeria, highlight practical compliance, implications and record keeping, then identify a risk and planning considerations for businesses and individuals. And then lastly, outline preparatory steps before 2026. Next slide, please. Now, who is affected? Nigerian companies and micro, small, medium enterprises, foreign companies with Nigerian operations or income, individuals with Nigerian business interests, and then expatriates and cross-border investors. Next slide, please. Corporate tax reform key changes. Small business relief. Companies with turnover up to 100 million and fixed assets less than or equal to 250 million are exempt from corporate income tax, capital gains tax, and the new development levy isn't the burden of MSMEs. Now, capital gains tax. Corporate capital gains tax has been increased from 10% to 30%, matching the corporate income tax rates. CGT now applies to indirect tax shares, including offshore structures tied to Nigerian assets, broadening the tax net. The new levy, development levy. A 4% levy on accessible profits replaces several sector-specific levies, like the Tier 3 education tax, IT levy, streamlining duties and enhancing predictability. Then we have the minimum effective tax rates. Large companies, high turnover, or part of multinational groups must now pay a minimum effective tax rate of 15%. Any shortfalls trigger hub taxes to prevent profit shifting. Then we have the anti-avoidance and global standards, the CFC rules, which apply. That is tax on undistributed profits of foreign subsidiaries. Next slide, please. Personal income tax. Then we have the progressive tax structure for individuals. Annual income less than or equal to 800,000 is fully exempt from personal income tax, relieving low-income taxpayers. Higher marginal rates now apply for top earners up to 25% of their earnings, making the system more progressive. And then we have the relief and deductions. Basically, consolidated relief allowance was removed and now replaced with a rent relief up to 500,000 a year, or 20% of the rent generated. And then we have the compensation for employment for those who actually lost their job. There's an exemption which has increased from 10 million to 50 million. Then residency and global income. The new residency rules clarify when individuals are tax residents. For example, you ought to be, for you to determine whether you're actually a tax resident in Nigeria, you have to spend at least half of the year in Nigeria for them to actually determine that you're actually resident in Nigeria. So 183 days presence or strong ties. So basically, if you have, multiple businesses in Nigeria and, most of your income is being generated in Nigeria, then you are regarded as being resident in Nigeria. Next slide, please. VAT rate and scope. The VAT rate remains 7.5%, but the zero-rated list is expanded to include many sectors, that is, medicals, educational books, and public transport. VAT for digital and cross-border services, especially for the people living in the diaspora. Foreign digital services are supplying to Nigeria, like its services, must register and remit VAT with accurate record keeping, broaden the tax base. Now, the crux of the matter is the e-invoicing aspects, the fiscalization, that is the mandatory VAT e-invoicing and real-time systems for registered businesses to improve compliance and transparency. So basically, the system is now encouraging, businesses to digitalize, their company, whereby invoices issued are digitalized, no more paper work. So your bank system is actually going to be linked, to your software system, whereby, there's a connectivity between, FIRS and the bank and then the business. Next slide, please. Compliance, penalties, and administration. So penalties for non-registration, late filing, or inaccurate returns have been modernized and strengthened to deter non-compliance. Nigerian Revenue Service, NRS, replaces the Federal Inland Revenue Service, aiming for better autonomy and enforcement. And then we have the new institutions like the Tax Ombudsman and Tax Appeal Tribunal, which will help to resolve disputes between, the customer and then IFRS. Next slide, please. The implications for foreign investors, individuals, and businesses, which is key. For businesses with Nigerian ties, expect a simplified yet wider tax net, especially on foreign controllers, indirect transfers, digital services, and passive income. Compliance burden will increase. E-systems, accurate record keeping, description of services provided on a timely and filing basis. What are the tax incentives? Tax incentives may shift. Smaller businesses gain relief, but large or multinational groups face minimum tax and anti-avoidance measures. For expatriates and cross-border individuals, residency and global income rules may trigger Nigerian tax liabilities where they did not exist before. Ensure all funds remitted are accurately described for tax purposes. The effective tax rate is going to start from 1st of January 2026, giving taxpayers time to prepare. Next slide, please. Now, there's registration and filing defaults and penalties. First, failure to register for tax. There's 50,000 naira for the first month of default and 25,000 for each subsequent month. The failure continues. Failure to file returns and incomplete or inaccurate returns will generate 100,000 for the first month of default and 50,000 naira for each subsequent month. Failure to keep books and records will generate a 50,000 naira fine for companies and 10,000 naira fine for individuals. Second, technology and information compliance. Failure to adopt required tax automation or physical systems. That is, if you fail to digitalize your system or have the accurate tax software for your company, this is going to be 1 million. First on default, and 10,000 naira for each subsequent day until compliance is met. Refusal to allow installation or access for tax technology, and then there's going to be similar high daily fines, and possible additional sanctions. Now, refusal to allow installation or access for tax technology will attract, similar fine until, until the technology is actually installed or implemented. 3, deduction and remittance failures. Failure to deduct tax at source will generate a penalty equal to 40% of the amount that should have been deducted. And failure to remit tax deducted and self-accounted for, we generate similar fine and must be paid fully, on remittance. And there's a 10% per annum administrative penalty, and then interest at the prevailing Central Bank of Nigeria monetary policy rates will apply. And this will include up to 3 years imprisonment or conviction if, convicted. 4, general and regulatory offenses. Failure to notify and change of address and cessation of business. For example, those who are in the UK who have actually sold their businesses or they've ceased, there's 100,000 for the first month and 5,000 naira for each subsequent month of non-compliance. So non-compliance with tax notices and information requests. That is, if FIRS require information and you are not compliant, in terms of giving them the right information, there's 100,000 naira to 1 million for the first day of default and 10,000 naira for each subsequent day. General or unspecified non-compliance, administrative fines from 1 million, possible up to 3 years imprisonment or both. 5, sector-specific and severe penalties. Virtual Asset Service Provider, known as VASP. Non-compliance, for example, those who are running crypto businesses, as defined by the Financial Action Task Force, FASF, we generated 10 million for the first month fine, and then 1 million for each subsequent month. Possible suspension or revocation of license. And then, fraud, false declarations, and impersonation obstruction, fines from 100,000 up to, 1 million naira will be imposed. And then prison terms, e.g. refusal to remit, obstruction, and armed assault on tax officers are possible depending on the severity and nature of the offense. And then the interest on late payments. 6, please. In addition to penalties, unpaid taxes attract interest from the due date until payment is made. Interest is typically based on the Central Bank of Nigeria, MPR, plus a spread determined by the tax authorities. Please note, penalties escalate quickly. A relatively small late filing can turn into a significant compliance cost over months. Persistent non-compliance can also lead to criminal sanctions, including imprisonment. Some offenders, e.g. like VASP, those who are running crypto businesses, financial services, money, Western Union, for example, or LEMFI, something similar like that, may face sector-specific, much higher fines and regulatory consequences. Now, what does this mean, for the people in the diaspora, the tax planning, next slide, please. So basically, the key actions, before 2026, I know it's just a couple of days to come, but it's something that can be done for those who are already, who already have businesses in Nigeria. First of all, is to review corporate and investment structures. Reassess residency and permanent establishment, just like I said, the 183 days, and update accounting and reporting systems, and seek professional advice and conduct tax health checks, for your companies and for your individuals. So with this, we move, to questions. There are some generic questions which have been prepared. So if some of the questions and answers there have not been covered already, then you're open to ask more questions after this. Okay, so the first question, do these changes affect businesses that no longer operate in Nigeria? Yes, parts of dominant structures may still trigger tax exposure, especially for capital gains, indirect shares transfers, and unresolved compliance obligations. So what this basically means is that, for example, if you have sold your business or you have sold your assets and you relocated, just like it is in the UK, like HMRC, they can still come back for you after 6 years for you to to pay your taxes, and this is similar to what Nigeria is also doing right now. So whether you've sold your assets, and you're no longer in Nigeria, as long as those assets have been sold, you are still going to be liable to pay the taxes. So question 2, are foreign shareholders affected by the new CGT rules? Yes, gains from indirect transfers of Nigerian assets or shares may now be taxable, even where the transaction occurs offshore. So basically what this means is that even if you have sold your assets and, for example, you are resident in Nigeria or you are resident abroad, the asset that you sold in Nigeria is still going to be taxable, regardless of where you live. So question 3, will small businesses still benefit from tax incentives? Yes. Micro, small, medium enterprises below the 100 million turnover will be exempted, from paying taxes. Question 4, has the VAT rate increased? No, the VAT rate has not increased. It's still 7.5%, but enforcement has tightened in terms of, the digital phase that is coming in now. All transactions are now going to be on e-invoicing, so you are required to register for VAT and pay your taxes as normal. Next slide, please. How do the residency changes affect individuals living abroad? Yes. So basically, individuals with sufficient physical presence or economic ties to Nigeria may now be considered tax resident and liable on global income. Like, the 183-day rule will apply. So basically, if you're caught, in this system, you're going to be caught by, the total taxation relief. So you may need to speak to your advisor, tax advisor, to find your way out of that. So what is the development levy and who pays it? Well, it is a 4% levy on associate profits. Basically, all your accessible profits within the subsidiary companies, primarily impacting medium and large companies, replacing several existing levies. So everything is now consolidated within the group. And then, this is a 4% additional levy that's been imposed on these companies. So what penalties apply for non-compliance? Like I said before in the notes, penalties for late registration, filing, and inaccurate returns have increased alongside the interest on paid taxes. So this is something that you have to take up with, if you are caught within this, you have to take this up with SRS and then, negotiate your way through. So what should business be doing now? Well, conduct tax reviews, update compliance systems, assess restructuring options, and engage early with advisors ahead of 2026. So I think that brings me to the end of the presentation. For those who have not already registered with FRS, there's a website which you can actually go into, and for individuals, you can go in there and log in with your TIN. You must apply for your TIN, and then for businesses the same thing, and then for tax professionals who are actually helping these individuals and companies, you can help them out. So that brings me to the end of the presentation. So if you have any further questions, you can contact me privately, or if you have time, you can still answer some questions.
Wow, thank you very much. This was very informative. Thank you so much for giving us your time today. So I have a few questions that members sent in, and I think that you've actually answered some of them. Right. So some of the ones I have here, might not have been answered. So we'll just quickly take these questions, and then please, if you have more questions, put them in the chat. We will not have enough time to go to individuals for questions. So please put your questions in the chat or send them to us on WhatsApp, and we'll do our best to answer as many as we can. And right, so this question is to do with bank accounts. So the person says, what are the requirements for those with bank accounts in Nigeria? Do we have to fulfill some basic needs to keep the account? And what is the taxable options for this?
Okay, that's quite straightforward question. I think, first of all, if you have an existing bank account in Nigeria and you are just an individual, you are not doing any businesses. Like I said, everybody in Nigeria now, whether you have a bank account or you don't have a bank account, you are required to have a TIN, tax identification number, because you realize that, some of the money that you have in your bank account, they yield interest, and this interest are taxable. So, however, as I said in the notes, that you are actually exempted. If your income in Nigeria is not up to 800,000 a year, but however, you can still keep your bank accounts, but you are liable to file your tax return. Using the website, and you will still be exempted. From there. So you don't have to close your bank accounts.
Right. So if you are not a business, you are just an individual, and you have a bank account in Nigeria, do you need to register for the TIN, or is your NIN sufficient? Is there anything you need to do as an individual, not a business person?
Well, this new reform does not only affect businesses, it affects individuals as well. So basically, when I said that, the 183-day rule, they will have to determine whether, you are resident in Nigeria or you live abroad. However, everybody in Nigeria now, if you have any business in Nigeria, or whether you're an individual or you have a bank account, you are required to have a tax identification number. And why do you have to have this tax identification number? It's for them to be able to monitor your tax position. Or, for example, if you have been taxed, inappropriately, then you are going to be, in a position to actually have some refunds. But without, the TIN, your tax, queries will not be dealt with. So having a bank account in Nigeria will allow you to be able to be in a good tax position when you are being queried.
Okay. So contrary to the first information that was spread, that said that for individuals, you only need an NIN and not a TIN. So what you're saying is that is not correct. Everybody needs a TIN.
Everybody needs a TIN as long as, you are paying tax in Nigeria. And everybody needs it, because the TIN actually helps you to be able to claim refunds from the FIRS, system. So the TIN is basically for your tax position. So it's not just whether you have a bank account or you don't have a bank account. It's for your own good, so that you can be able to claim back, whatever tax deductions that they've been taken out of your income inappropriately. Because every bank in Nigeria, anyone who has a bank account in Nigeria definitely has interest on those accounts, and those interests are taxed. So if you are not earning up to 800,000 naira in a year, you are entitled to claim back your tax that's been deducted from source.
Okay, so this is a question I'm sure is on many of our minds, even though it is a funny one. How can we keep our account safe from this tax, business account or personal account? How can we keep our account safe from tax being deducted? I suppose you've answered the question, but if you want, for this person's peace of mind, please.
Well, basically, because the whole thing is now digitalized now, so and bank is linked to the tax system. What do you mean by safe? Safe, for the government, or safe for yourself, or not paying tax? Everybody in Nigeria now, because of the TIN or the new reform now, will be liable to pay tax, unless if you are outside of the scope of the 183-day rule, or you are not a Nigerian.
Okay. So you mentioned paying taxes on sold assets. Is there a time limit to do this? So is there how many years would they trace back? So if you sell a property, maybe an asset like 6 years ago, can the government still come after you, or is there a time limit for which you? Yeah.
Well, like for example, in the UK, it's 6 years. So in Nigeria, because it's a new tax reform, unless that has been taken up, with IRS, where we don't know what's their policy is at the moment. But first of all, they want to make sure that the administration system is working for everybody, and to put everybody in line, because right now it's not. They're only informing people right now because it's a new start of the system. So they're not penalizing anyone now. They will only start penalizing people right from 1st of January if you don't, you're not in check, with all these rules. So we don't know what the penalties will be, maybe until after, they've done their investigations and they see that people are not really paying their taxes, and then they might follow the same system as, what UK is doing. But in the UK, it's 6 years.
Mm-hmm. Okay, so I've got a very interesting question here. It says, for those of us that have huge amount in savings in Nigerian bank account and we generate profit as interest, would that be classed as revenue for tax purposes?
Absolutely.
Right. Okay. That is interesting. Right. Okay. Sorry, I'm just admitting somebody. Let me see which of these questions we have not. Okay, I've got one here. Would we need an accountant or a tax expert to comply with these rules? Or is this something we can do ourselves?
Well, it depends on the individuals. If you're not confident enough, then you need a tax advisor to help you, especially, with your tax planning. Especially if you have, businesses going in Nigeria, you need to be on the safe side to get the experts, knowledge and the expert advice to be able to guide you through on how to mitigate your tax position.
Okay. Right. So if income or assets are managed in Nigeria by family members, how does that affect tax responsibility under the new law?
Well, under the new law, everyone that has an account in Nigeria is responsible for their own accounts, not under the family, unless if it is a combined business. So the person who is actually responsible for the business must make sure that they're compliant.
Okay. I have a question here, but on fixed investment, we already paid withholding tax. Do we still need to pay any other taxes outside of that?
Remember that withholding tax basically is tax on transactions, and is backed up with certificates of sale. So yes, of course, you still need to pay other taxes, because withholding tax is just one aspect of the tax system. You still have your corporate tax, and then you have your CGT. So withholding tax is just a transaction on it's a transaction based revenue, which can claim back once you have your certificates.
Okay, I think this person has continued. She said, with tax on the interest on investment. So she said, but on fixed investment, we already paid withholding tax. Do we still need to pay any other taxes outside that? With tax on the interest on investment. I'm not sure I understand that, but you might understand.
Yes, like I said, if it's a company or individual, everyone is entitled. You're liable to pay taxes. But on the withholding tax, you can get your refund once you have your certificate of withholding, that they withhold that transaction. Say, for example, every transaction is 100%. I think it's perhaps 10%. So you can only get 90% of that revenue. So the person who is paying you, we withhold 10% of that revenue until you produce a certificate, withholding tax certificate, to be able to claim that back, from Nigeria.
Okay. Right. Okay. So she's happy with that answer. Right. I've got one more here, and then I will just allow anybody to unmute themselves and ask one or two questions, and then we'll finish for the day. So this one is about documentation. What documentation or records should Nigerians in the UK start keeping to protect themselves going forward?
Well, first of all, the documentation that you need to keep is your invoices, your expenses, and then your sales revenue invoices. That's what I said about, the e-invoicing. You need to keep that.
Yeah.
Yeah.
Okay.
And then, all your expenses that goes through, your bank accounts has to be kept appropriately.
Okay. That is fantastic. Okay. So does anybody want to unmute and say something quickly, even if it's a thank you or one or two questions? All right, Michael, please go ahead.
Hi, good evening, everyone.
Hello.
Thank you, Mr. Olubode, Olushola, my boss.
Yes.
All right. So I just want to appreciate, you for the explanation, detailed explanation and analysis of, of the NTA 2025. All right. I'm also an accountant practicing in Nigeria. Yeah, partly late last year to, first of all, this year I partnered with, a company to build a payroll product. And yeah, you have done a lot of justifications. So, like, following, the trending fear the social content creators have created in the minds of many Nigerians. Now, a lot of things are different, right? Now, while we were building payroll products, I had to engage people in, Alpha Beta Consulting, who manages the revenue and tax collection in Lagos State, explaining some of the loopholes in, the tax assessment, especially relating to the rent reliefs. All right. So there are some that they didn't have answers to, and they were like, oh, they're going to have their meeting and get back to us,
Yeah.
Probably in the gazetted copy of their own, of the law. Right. Some of the loopholes, include rent relief, for Nigerians, for example, some who live in Lagos State, for example, and their rent relief is capped at 500,000. Yeah. So how will they know how much I pay as rent? I can come up and provide the receipts. How do they monitor all of those things? And another question I asked them was, okay, I have a staff strength of say 500,000, say 1 million or 500 rather. So how do you confirm, the rent receipts of these people? How do you know whether they are claiming this amount they paid as rent is valid for them to claim this rent relief? All right. So these were questions that were not answered. However, they were going to withdraw a lot of people during the processing of their tax clearance certificates. So during when you're applying for your tax clearance certificate, there's a part that speaks about your other expenses. You mention your rent, how much you pay as rent. I think that is a major loophole, which many people have not really understood, right? Beyond other loopholes which are actually analyzed for the organization. So people should not fear, right? If you do not generate revenue, if I do not generate revenue in Nigeria, they have no responsibility to deduct a dime from our account for the whole of 12 months calendar.
Absolutely.
And also there's this concept of separate entity. Someone asked, I have a business in the name of my family. Recently I was consulting for an organization who moved from business name to a limited liability company. And I was telling them, oh, these are two separate entities. Let's say there is a Michael Ventures, which is being operated by Michael and his brothers back at home in Nigeria. And there's another company called Michael Limited, right? So for the revenue generated by Michael Ventures, is being handled by Lagos State if the office is resided in Lagos. For the one, established by Michael Limited, will be handled by FIRS, now NRS, right? Yeah. So there are exposures. For Michael Limited, for example, we only pay tax VAT as it were if I generate revenue of about 100 million.
Yeah.
All of these things have some of their caps for me to pay, but for business names, owned by sole proprietors, managed by family, Michael Ventures, the Michael Ventures will be assessed based on the revenue I have generated per time at the end of the year. And they won't come monthly. It is usually at the end of the year. You will not come with how will they ask? Provide your tax clearance certificate. It's at the point of, processing
Sorry,
partial
Michael.
activities.
Sorry, you might want to take that offline. You might want to take that
Absolutely.
offline because some of us are novices here, and we're like, okay, this is getting a bit too complex.
Mhm.
Two accountants speaking, so please pity those of us that are not that are novices here. Right. Okay. So this has been very insightful. Thank you very much. Thank you for giving us your time today. And yes, thank you for everyone that participated. We'll be dropping, I saw somebody ask for a link in the platform. How do I get tax identification number? We will be dropping some information. And if you don't mind for us to share this PowerPoint, your slides with the house as well. And yeah, so I just want to say thank you to everyone that attended. So this is one of the things we're proposing as your leadership team. We're hoping that at least once every month we will be having discussions and conversations like these around popular or burning topics like immigration, for example, and the likes. So yes, thank you very much. This has been really encouraging. And if you have any other questions, you feel free to send them to your leadership team, and then we'll forward them to our expert here. Please don't go to him directly. Do not bombard him. Please come to us, and then we will liaise with him on your behalf. We don't want to bombard him just so that we don't scare him away, and then next time he'll be like, no, thank you. So yes, thank you very much, everybody, and enjoy the rest of your evening, and Happy New Year in advance. Bye. Thanks for joining. Bye,
Thanks.
everyone.
Bye.
Bye.
Thank you.
Bye-bye.
Happy New Year in
Bye.
advance.
Bye.
Bye, everybody.